Hey, everybody. Welcome to another episode of the Creative Finance Playbook podcast. I'm your host, Jen.
I'm Joe.
And today is a very special day because it's actually going to be our last live edition with everyone today. We are really excited, but we are going to start recording these behind the scenes. They'll still come video if you are following us on YouTube, Creative Finance Playbook, and of course on Apple and Spotify. You can always check us out there. We upload both Tuesdays and Fridays for some amazing educational, inspirational tips and tricks when it comes to buying real estate without banks. And today we're really excited because we're going to dive into the whole question of which is a better strategy, subject to or wraparound mortgage. And we're going to really talk about the differences and why we feel very strongly about using one method or another. And yeah, I'm just really excited. Thank you for always being here, following us. And if you do come live and ask those questions and you're going to miss that part of it, please make sure you're in our Facebook group over at Creative Finance Playbook with Jenn and Joe. We have an amazing Facebook community where we drop question boxes every single week where you can come in and ask your questions. And our team and I and Joe go through there. We pull those questions and then we use those to be able to come to you on the podcast. So we're still here for you 110%. I just wanted to let everyone know.
Well, I'm excited to check out the studio and actually go to another level with these too. So we're going to have some really cool topics. We're going to have some great interviews too, guys. And we want to make sure we're just bringing the absolute best every single time for you. And so we're dedicated to that and super excited. So today's going to be one of my favorite topics to end it on a bang as far as the live ones go. But once again, guys, if you do have questions, make sure you're in our group, right? Be a part of the community. Ask the questions. We share a lot. There's a lot of resources in there, a lot of good wins and things like that. There's also deals in there, like floating all over the place. So make sure you're in there, and some future announcements will be dropped in that group. So if you're not in Creative Finance Playbook, our private Facebook group, guys, y'all need to get in there like now. Stop what you're doing. Go join. But until then, we're going to talk about today, what is the differences between buying real estate subject to versus with a wraparound mortgage. And I got to tell you, at first, when we started learning this.
Well, first of all, it just sounds like a whole bunch of mumbo jumbo to me when I didn't know a thing about real estate investing.
It was a lot, right? Especially when we were first getting started. And so we're going to break that down today, what they all look like, how they operate, and why we choose one over the other, and some of the successes in the small details.
Yeah, there are some true benefits. And I think this is a topic, if you're kind of confused about it, we've been on really big podcasts where even the host needed us to like rewind a little bit and really break it down for them because it's not really a strategy. When we talk about a wrap around mortgage, it sounds very simple to us because we've been doing it for a few years, but there are some really key details that we want to just unpack here. And again, you always want to consult your real estate attorney, title companies, and the states in which you're doing these deals because it is really important to not fly by the seat of your pants when doing creative financing.
Yeah, this isn't something you're going to want to watch a couple of videos and say, hey, like I'm doing this and start writing up deals and go to closing. Always consult a professional. That is my number one thing. So whatever state you're listening to, guess what? This works in all 50 states. Good news. But find the attorneys that really, truly get how to do this and cross all the T's and dot the I's to protect you, the buyer, and your sellers equally as important, right? Yeah. So what are the big differences? So when I'm buying a property, I could either buy it, and there's many different ways. Sometimes I'm going to the bank and I'm applying for a loan, but we're not doing that. This is not what this is about. And actually, I don't like to do that. It's so slow, and it's impossible to really scale a business that way. So then what's left? Well, especially with rates today, right? As this is being recorded, rates are like in the 7s right now. So it's a little high. So then sometimes I find a deal where a seller wants to sell their property and they're open to us assuming the loan. Mm-hmm. So we're not doing that either, but I'm going to explain the difference so you know. So assuming the loan just means that I now have to apply at the bank. Now I need to have my credit checked. Now I need to provide a proof of income and tax returns and pay stubs, and I got to do all of this stuff, right? My debt to income has got to go in line and work for that deal. And then if it gets approved, now I'm assuming that debt onto my personal credit. So if you're trying to scale a real estate business, that does not make sense. And we don't do that. And you can buy all of the real estate you want without having to go through that process. So good news. So now we're going to get into what subject to is. Subject to is where I am able to buy a piece of real estate subject to the underlying debt. So I have a seller and they owe approximately $180,000 on their home. I'm able to go to closing, buy the property, and the loan balance stays in the seller's name. That loan stays with the seller, and I am buying it subject to the underlying debt. They're just deeding me over the property. So I'm going to now own it. They're going to just flip the deed over to Joe, and I'm going to continue to pay their bank directly. So if they're with Bank of America or Chase Bank or the local bank or the local credit union, I'm just going to end up paying that lender directly every single month. And that is a popular way of buying real estate, but it does come with some drawbacks too. I think one of the big ones is it's a trust thing, right? And for me, it's about obviously making the great deal, but you got to protect your sellers as well. And the reason why subject to does cause some issues is because when that deed gets transferred over to the buyer, well, what happens if you stop making the payments? There's no way for the seller to foreclose on you. That you just deeded them over the property. There's nothing recorded showing that you owe the debt or your entity owns that debt. They just gave you over the property. You're going to deed that into your LLC or better yet into a trust, however you're going to do that. And then they're just hoping that you make the payments on time, right? So it does leave a little bit of, it's just not as well protected for your sellers. Now, also too, that debt is on your seller's credit report. Now, many of these people are not going to apply for a mortgage later on, but still you're going to run into a bunch that will, right? So you're going to need to show proof of payments. Well, there's nothing recorded showing that you're the ones making the payments or that your trust or your LLC is. So that becomes an issue too. I've heard people talk about they could use a third-party servicing company, and I've heard mixed reviews on that. I've heard some lenders will accept that. I've talked to other lenders where they say, no, that doesn't work here. So maybe they just don't know the rules, but that does cause issues. And especially if I'm dealing with a seller who maybe says, no, I don't want to get a mortgage with somebody else. I only want to go to my credit union and they won't take this, right? Yeah. So it does leave some issues there too. So not saying it's a bad thing. Lots of people buy these properties subject to the underlying debt, right? The seller doesn't have any equity. They're just in a tough situation. They just need to get that payment off their back and they want to walk away. But you got to always make sure that you're setting up your sellers for success, because after I buy a house this way, I really don't want to have to talk to my seller ever again. But they do call you. They will reach out to you, and it happens. And I know they don't talk about that on podcasts because people don't, but we've been doing this for a very long time now. And so for the people who say that your sellers never call you, they're full of baloney.
They're lying. We just talked to one last week.
Or they've never done a deal.
Well, that's true. Yeah. Because a gentleman that is in the process of getting another property. So we have to show proof of payments being made on time every single month for the last 12 months. And so the reality is you definitely have to have a good working relationship.
Yeah. And you got to be on great terms with your sellers because they will reach out to you. We've got some who are like, hey, just checking on the property. How's everything going? I'm like, going great. They just want to know, yeah. Right? Sometimes. So that's going to happen. So making sure that you're having a great relationship, you're doing the right kind of business, you're protecting yourself as the buyer, you're protecting your sellers. And if everybody plays good, then life is good, right? Mm-hmm. But then we're going to go over what's a wraparound mortgage. And that's what we're going to talk about now. This is actually my preferred way to do it. And we learned this from our coach, who's the godfather of this, he's almost 80 years old. He's been doing it since like 1980, and mm-hmm. He's been around for a very long time. And so the one thing that I've always loved about this is they really accomplish the same thing. If that seller owes $180,000 on their house and they want to sell it for what they owe, I can still do that. And what happens is my attorney is going to draft up documents. It's a new mortgage. It's just paperwork. It's not me applying for a loan, but this paperwork has language in it. And the paperwork says that my land trust is going to be making payments to the seller. And this is going to get recorded. And it's also going to say, though, if my land trust stops making payments to the seller can then foreclose on the land trust. And even take it another step further, there could be wording in the land trust that just says if the payments are being made, the beneficiary interest could be deeded back or given back to the seller. So there's a lot more flexibility with a land trust. I know some people out there, big names, to say, oh, you don't need land trust. Y'all are crazy. Yes, you do. For privacy reasons, you don't want your name or your LLC on anything. It keeps it private. And how you set up your entities are extremely important. So just going on some whatever website and go get an LLC and put it in. That's not the way to do it.
Like taking the cheap routes and any of this just is never like the best option in my opinion.
Yeah, and we've worked with some of the best attorneys.
The professionals,
We've worked with some of the best attorneys who are been doing this for decades and they're not new to this, okay? Mm-hmm. And this is the exact way to set up your entities, your estate plan, even how to save on taxes, right? So you work with the professionals, and I gotta say, of all of the things that we've done a good job on, was get the right people around us who know way, way, way more, who are the best in the industry, and learn what the successful people and learn from their mistakes. Because the biggest things you learn are not always your wins, but it's your mistakes. Like, if we did that, this would not have happened. Well, we could talk about a lawsuit we bought a refrigerator for one of our properties. The guy delivering the refrigerator tripped and fell in the driveway. I got a letter in the mail from an attorney saying that I'm being served for this guy tripping and falling in our driveway. It was a year and 9 months after it happened. I never knew it happened. But what they did do, because I just went and had an LLC formed, they not only pulled my personal name on the lawsuit, they pulled all of the LLCs, even LLCs that we owned that weren't even part of this property, because it was all easy to find. So you really want to make sure that you're protecting your empire, right? The more properties you get, the more you have to protect. So the reason why I'm going to go back into wraparound mortgages is that lawyer is going to draft up a document. It's a promissory note. It shows that this land trust is going to be making this payment to this seller. And if they don't, they can foreclose on it. There's an instrument recorded. The other thing, like you just mentioned, we have a seller who we bought his property with a wraparound mortgage 3 years. Was it 3 years ago?
2 years ago.
2 years ago in Florida. Beautiful house, beautiful neighborhood. It was completely remodeled before he bought it. He then decided to move back out of state, across America to Washington. And then he's been living there, renting for the last 2 years. And now the house that he's renting, he wants to buy it. He wants to buy it. I talked to his mortgage guy. The mortgage guy out there was actually fantastic.
Yeah, he sounded like someone we should get on the podcast.
I am telling you, he's like, oh yeah, I'm an investor myself. So I know you bought this with a wraparound mortgage. So the lender just needs to show that you've made 12 consecutive payments in a row and you guys are good to go.
Now, if we bought that with a subject to, how would that go?
Well, there's no promissory note. There's nothing saying that we have to make the payment. It just deeded the property to us.
So there's no, we can't prove anything. Can you not get another mortgage?
So I really think that's going to be based on the lender and what they're willing to look at or go around. And it depends. Like there's some small town banks who can make some things happen. But if you walk into like Wells Fargo or Chase or some Bank of America, it's going to be difficult, right? So I know people said before that you could use a third party servicing company that proves that you're not paying it. But I've also talked to mortgage people too, who's like, yeah, no, absolutely. They've been doing this for 30 years and that doesn't work. But that doesn't mean it's true, because I have realtors who tell me buying with wraps is illegal, right? So they don't know everything. Don't get me wrong. But here's the easy button. Do a wrap. Have the documents. Show that the 12 payments were coming out of your checking account. You don't have to hire some third-party company to make your payments for you. Set it up on automatic payments directly from your account. It just seems like it's just so easy, because some of these third-party companies, I didn't realize they're charging like $100 or more per month just to make your payment for you. And then you hear horror stories of, they didn't send the payment in time because you're sending the payment to them. And now the seller's getting calls from their lender saying that they're not getting their payments on time.
Well, I even asked you, like, well, how are they going to stay up on escrow changes? Because that's like the one thing that we constantly have to check every month, because it happens at different times throughout the year where all of a sudden it could change by like 37 cents. And now you either owe a little bit more or a little bit less. And sometimes that bank does not accept that payment.
Right. So. Yeah. So that's kind of a problem, is you got to make sure that you're also always sending the right payment, because if that payment changes ever so slightly, it's not just set it and forget it and think that payment never changes. They do, because of taxes or insurance, escrow shortages or overages. So you just want to make sure that you're doing your diligence to make sure that the deal's protected and done right.
Yeah. And I guess my question too for you, over the last few years, subject to has really become like hot topic, very synonymous with creative financing. But do you think everybody buying subject to is buying subject to, or do you think they're actually putting a wraparound mortgage into place?
So I think it depends on the state. So some of the people who teach this are on all different states. Now we buy in multiple states, and but the thing is, I think one of the differences for us is we learned this in New York State, which I have to have in New York State, an attorney represents the buyer and attorney represents the seller, right? So you've got it. And every time that we would try to do a subject to deal, the attorneys would all shoot down the deal and say, nope, my seller's not protected. I'm not going to do this. And then I'd say, well, we actually don't buy it subject to. I buy it in a wrap. So there's actually a note creating saying that if I don't pay it, that they could foreclose and get the property back. And that's been the difference of us being able to do the deals there.
Mm-hmm.
And so New York is a really tough state to do business in overall, but we learned in one of the hardest states. So if we did it right in that state, guys, this stuff translates to other places too. And this is the key to getting around the right professionals. And I think that's the real, the thing that gets overlooked. I had somebody reach out to me just the other day and say, I'm trying this on my own. I'm just watching a lot of YouTube videos and I'm having conversations with sellers in California that says, if you don't, if I don't buy, you could just simply just foreclose and take the property back. But you also have to know the foreclosure laws, because in some states like California, if you had to foreclose on somebody and they were really putting up a stink for it, that could be a really long thing too. So you got to really make sure that you're doing good business. You know what you're doing. You're getting proper education on this. Because guys, when I did my very, very first deal 24 years ago, that was a wholesale deal. That meant once my seller and my buyer came to the table and everybody signed the paperwork and the deal was done. Like, my seller got their money, I got some money, my buyer got a house, the deal's done. Dust is settled. There's no more. But like what Jen was talking about with these creative deals, these turn into longer term relationships with your sellers.
Mm-hmm.
So some 6 years later might call you and say, hey, Joe, Jen, how's the house doing? Right? So that happens. So we just want to make sure that when these conversations are had, or, hey, now I want to get another mortgage and the bank's saying that I need this, it's just easy to have that.
And again, I just want to revisit, they're different things. So an assumption of a loan is different than subject to, which is different than a wraparound mortgage. While they're all almost doing a very similar thing, the details are in the paperwork. And it really comes down to the paperwork when and if things hit the fan, right? Like, life can happen.
Well, and you're right. Because I had somebody say, hey, I'm buying this house subject to, and I'm assuming the loan. I was like, oh boy.
Back it up, right?
Yeah. No, you're not. You're maybe doing one of the two, but you're not doing both. Because assuming the loan means you need to use your credit.
Yeah. And I feel like, it's no fault to people, but there's so much information out there. It's like, you really have to know like who you need to trust, who's actually doing these deals, who's in this business currently. Because even realtors who maybe have been a realtor for a very long time, they've told you it's illegal, or they'll say, oh yeah, a loan assumption, and then they start rattling on. But so you have to really take your own education really seriously, because I remember when we first got started, it was a lot of information to take in, and then you start walking through the step by step and executing all of the things. But like, now, being in the business for a while, I can see where it's just a sea of information in Facebook groups and YouTube channels and videos. And it's very alarming how much information there is. It's like, you need to make sure you listen to the right information.
Well, and not only that too, we learned about this strategy back in 2016. We hired a coach right away. We spent the money. I never went to college, but I saw the benefit of, like, I saw the big picture, but there was missing pieces. I knew we needed to get a proper education on this, because this really, truly mattered. I didn't want to mess it up.
Yeah.
So we hired somebody back then, spent money on ourselves, right? In education, but that's the best education that the return on that money has been fantastic.
I don't know, my master's degree in English.
Right. But this is the point, so we spent some money doing this back in 2017, did our first deal then, and is done a ton since then.
Yep.
So we've seen the market go up and down. So when you're listening to some of these podcasts and maybe somebody's closed their first deal and they're really excited and they're sharing that success, there's so many other things that you got to really look out for. And that comes from experience and getting around the right crowd. So I think one of the best things that we've done is surround ourselves with the timers that were doing this for a very long time, learn how to do it properly, get around the right attorneys and title companies who know how to do this, have somebody like Bob Bloom, who's, helping us set up all of our entities and estate planning, and making sure that when we could just focus on the things that we love, help sellers with their real estate problem, buy some of these properties, offering them to our renters with rent-to-own strategies. So now we're actually turning renters into homeowners. We're making more money this way. We're getting less of the phone calls than if we just had standard rentals. So if we could actually help sellers, we could help potential buyers, we can make more money, and everybody's happier. That's how we're creating a ton of wins. And this is why I love to do what we get to do.
Yeah. And I think too, we kind of maybe glossed over it, but again, these strategies that we're discussing right now, these are with sellers that have properties with mortgages. So again, if you have a seller finance deal, I don't want to say it's easier because I think they're both equally easy once you know all the right steps to take. But there's a little extra something when you are, having a seller's mortgage and a seller's credit on the line. And that's where, obviously I want you to pay your seller if it's a free and clear house too, seller financing, but now you're tying in the seller's their credit. And that's super important to be very mindful of that.
Spot on.
Yeah, well, I think it's important to say because, again, we talk about ethical business, really making it a win-win-win in our case, because I think the sellers get a win, we get a win, and then our tenant buyers get a win. And I think that's just like the trifecta there. But
our bank accounts get a bigger win too.
Woohoo! And you get to live in Florida and get to share with everybody here about how we did it, right? Like it started with one property in 2018 was when we got our first wraparound mortgage deal. If we can chat about her for a moment. And guys, that was a free lead. We were not marketing at all, I don't think. I don't even think we did a mail drop or anything, but we had our Facebook page, 585 Rent to Own. We were looking for some tenant buyers for the properties that we did have. And I think we had them all filled at that point. And she found us. Good old SEO, Google ranking. I'm not sure exactly what, but she found us. And she said, hey, I have a house. It has a mortgage. Would you like to help me out and buy it? And we said yes.
Yeah, bought it with $100 down, right? Still own that property. It is more than doubled in value, almost tripled in value since then. And it's been just a fantastic property for us in a great location in one of the hottest zip codes in the whole country besides. Yep. So it all just starts one deal at a time. So if you're listening in and you want to know how can you get started, maybe it's your next deal or your very first deal, you got to get leads. Yep. And we share how to do this right on our website, creativefinanceplaybook.com. So if you want to have the 10 magic questions that we ask every seller, because they're going to reach out to you if you're going to run some of these free posts that we talk about on how to generate off-market leads for free, they're going to reach out to you. And if you want to know what questions to ask them, just go download it. It's the same one that our script, our coaching group, that we all use the same exact one. And this is helping people do deals all over the country. So it's free. We want to help you get started, guys. So go get the script and go get the way to generate free leads. Because if you got leads coming in, you know how to have the right conversations by just text messaging them one question at a time in the DMs. There's nothing stopping you from getting some deals. So get started. If you have a great deal and you're like, hey, Joe, oh my gosh, I have a great deal and I want you to buy it. Well, then call my cell phone number and I would buy your deal. I met with our accountants today and we would like to buy a couple more deals by the end of the year for some more tax write-offs. So time is ticking, guys. So call my cell phone or text me. My phone number, it is my cell phone. If you call me or text me, I will answer or I will call you back. So don't be surprised when I do. It is 585-207-2240. That's legitimately my cell phone. So if you call me, I will call you back.
And yes, this is our final live Tuesday that we are doing with everybody. So I have a few questions here. Thank you so much, Stephen, being here today. Your question coming in from Facebook: does the property stay in the seller's debt to income ratio? Kind of talked about it briefly, but want to elaborate a minute?
Yes. So it does. The debt will still be on their credit report, but with the new note that we've created, they can now prove that we're using our land trust making those payments. So that's why the lender wanted to see us making 12 payments consecutively so they could help wash out that debt so then they could qualify for their new mortgage. So once again, wraparounds, so easy peasy. I just had to pull up our bank account, pull out the 12 months, send it all in.
You did?
Felipa did. Shout out Felipa.
Thank you.
If you're watching, thank you, Felipa. But that's really what it was. Back in the day, I would call my wife, Jenn, and I'm like, hey, babe, we need to do this because we've had this happen many times where
we've helped many. I think we've helped one seller twice so far.
He bought a house. We bought his house on a wrap, still own it. He moved, said, this is the last time I'm buying a house. We just need to show the 12 payments. We showed it to the bank. He says, oh, boy, guess what? I'm moving one more time, but this will be the last time ever. You got to show the 12 payments again. And we did it again, and it worked just fine.
So again, the relationships that you make are really important. And, just if you have any questions as you're doing this, get around the right people who are actually doing the deals. We're really passionate about that. I know we're currently working on one up in upstate New York in a tiny little town. And she's got a mortgage on it, correct?
Yep. We're buying it for what she owes, as long as she could get $2,000 down at closing and we cover the closing costs. So her mom's sick. She's taking care of mom.
Yeah.
She's missing a little bit of work. She's like, if I could just get $2,000 and walk away, you guys could take over my payment. Her payment is like 600, I think 605 all in. And we seem to find like comps renting around 1,200 for that property.
So there are still deals out there. And I just wanted to bring that up because I feel like some people are saying, oh, there's no cash flowing properties to be had. And that is, if that's what you're telling yourself, then you are right. That is what you're going to find. But on the flip side, those of us who have the mindset of there are people out there, what was the percentage of people with 4% and lower?
So 40% of houses owned all over the country don't even have a mortgage. Nothing, free and clear. 40%, 4 out of 10 don't owe anything on it. But the bunch of them that do, all the ones that have a mortgage, 66% of those have an interest rate under 4%. All of those ones at 2 and 3%, those are the ones that cash flow, because on the deal that we just bought, they had a 4% rate. The payment at 7.5%, what we would have changed the payment over $500, closer to $600 a month. And that $600 is our actual cash flow. So if I had to buy that deal and pay that rate, we would have not had any cash flow. The fact that we could get it at 4% is the reason why we're cash flowing. And guys, this is a 2-year-old house that we just bought in Florida with $12,000 out of pocket. And we got a new house, like 2-year-old, brand new, turnkey. Folks are moving out of state and we were able to buy it. We just closed on that a few weeks ago. So these deals are out there. There's cash flowing properties. It don't matter if it's in New York, Alaska, California, Florida, or anywhere in between. They're all over the place. And there are people out there who need our help. So guys, find them, help solve their real estate problem. Even on these beautiful houses, we could help them too.
And Nick, coming in from YouTube, you have a question about land trusts. We actually have a great connection that we just made. Does he do all over, or is it just Florida?
He's in Florida,
Okay.
But if you do need any help with estate planning and things like that, Bob Bloom is really, really good for that.
Yeah, so text Joe directly. We can send you over a link, or make sure that you reach out to us through Creative Finance Playbook, and we can definitely make sure you have that information, because we share people that we know, like, and trust, that we've done business with before, and we constantly want to make sure everyone's in the right hands.
Yeah, and we did find a really great attorney in Florida recently who was like, nope, I understand land trust, because not all attorneys are created equally. Some are like, no, you can't do that. I've had some in Pennsylvania say they don't recognize here. And then I've had another attorney, no, they're great, and they use them. So make sure you're finding yourself a really great attorney who gets it. They specialize in this stuff, and then be really nice to them and use their services.
Absolutely. Well, thank you so much for being here. It's been truly a pleasure to come live every Tuesday at 2 p.m. Eastern, but make sure you're following on our podcast channels if you're not already, so that you can hear every single episode that we drop. We've got so much in store for 2025. We've got big things happening. We want you to be in the loop and staying connected with us. And we'll be coming live still from time to time.
We got some huge announcements, guys. I'm talking like, whoa, announcements that we haven't even dropped yet that are coming so soon. It's incredible. We are so blessed. So this might be the last time we're coming live on Tuesday at this time, but there's going to be way more content, way more information, way more just value and how to get you guys going. And there's going to be times where we're popping in still live too. So stay tuned. Make sure you're in our Facebook group and subscribe to YouTube and all of our podcast channels, guys.
So thank you. Until next time, we are Creative Finance Playbook with Jen and Joe. Go out there and do some deals.
See you guys.
Bye.